if you look at the multiples that we're paying, it's a very reasonable price when you benchmark with the typical acquisitions in this space. It is a category which is growing and has been growing in the last 15 years. And we do foresee that the category will continue to grow at a 5-6% CAGR. So we view it as a strong acquisition, a strong deal. And also the EBITDA is very solid at 18.3. So it's a good deal for Nestlé Health Science and for Nestlé.
Greg, it was notable in the recent Nestle numbers that there'd been a pickup in e-commerce, direct to the consumer sales, and Nestle known for very well-known brands that the customer has been familiar with for decades. Some of these brands that you're bringing into the portfolio through Bountiful are slightly newer in the earlier adopter product category, I would imagine. How much is the retail presence going to be more important for this type of portfolio versus e-commerce at the starting point?
Yeah, excellent question. So, obviously, this deal gives us scale and opportunities for expansion. The size of the mass retail is about 80%. 20% is in e-commerce. We actually have in our vitamin, mineral, and supplement a lot of success and experience in e-commerce. We are roughly at 40% of our sales are in e-commerce already. So we do see here a great opportunity to further grow and accelerate. And the Bountiful company has done a tremendous job in the last 2 years. They've multiplied their e-commerce footprint by 5x. And so we believe we can continue that momentum and really be very successful in e-commerce.
Greg, the strategy for a lot of corporates now is market share. That's where the gains are when it comes to various sectors. When you now put this business into the portfolio and look at your share in vitamins and supplements, what have you got now and what are you aiming for? So could there be more acquisitions?
Great question. Well, it's a very fragmented sector in general. You don't find, before this acquisition, nobody had more than 3-ish% market share. We are going together to reach about a 5% market share. So we believe that internally we can grow further. We will have a great footprint in terms of leadership, complementarity, as well as scale. And as I said, opportunities for expansion. So we do see lots of opportunities to grow in turn. And then, future acquisition, there may be more. I think it's a very attractive segment.
Greg, I know you're tight on time, but I'm obsessed by pricing power at the moment as well, and margins and raw material costs. Central banks think they're transitory. What do you think, sir?
Well, in this category, we believe that margins are still very good, and the raw material ingredients are fairly stable. We do see an increase in transport costs, and hence efficiency is important. And by bringing a sizable acquisition, it will help us manage through these fluctuations.